Tesla had FSD progress, Robotaxi expansion news, and even a major SpaceX IPO story this week. But TSLA still finished at just $406.43. So the real question is not, did Tesla have good news? The real question is, why didn't the stock break out? Hi, this is Ken. This week was a very important week for Tesla. At one point, Tesla stock dropped into the $380 range and briefly fell below $400. But by the end of the week, TSLA recovered and closed at $406.43. So yes, it was a volatile week, but it was not a complete breakdown. And for investors, that difference matters. Because when a stock falls below a key level, what matters most is not only the drop, it is how the market reacts after the drop. In Tesla's case, buyers appeared below $400. That tells me the market is still interested in Tesla at those levels, but at the same time, Tesla has not clearly broken above the $410 area yet. So next week, the key question is simple. Can Tesla hold $400 and can it recover the $410 level with strength? Now, the stock chart is important, but this week, the business news was even more important. Tesla had progress in FSD, Robotaxi, energy, semi, and the broader Elon Musk ecosystem. Normally, with this much news, you might expect Tesla stock to move much higher, but that did not happen. And I think this is the most important point of the week. The market is no longer reacting only to big headlines. The market wants execution. It wants proof. It wants to see whether Tesla can turn these stories into real revenue, real scale, and real operating results. First, let's talk about FSD. This week, Tesla's supervised FSD received approval in Denmark and Belgium. That means Tesla is slowly expanding its FSD approval footprint in Europe. And this is more important than it may look, because autonomous driving is not only a software problem, it is also a regulatory problem. Even if the technology improves, Tesla cannot scale FSD unless governments allow it. Europe is one of the toughest regions in the world for regulation, so every approval matters. It gives Tesla more credibility, it gives regulators more examples, and it helps Tesla build a path toward wider FSD adoption. There was also important safety data from the Netherlands. According to Tesla side data, supervised FSD was 3.5 times safer than human driving. Now we should be careful here. This is still Tesla side data, so investors should watch for third-party verification and longer-term results. But the direction is important. Tesla is trying to move the FSD discussion from emotion to data. Instead of only saying FSD feels impressive, Tesla is trying to show FSD can be measured. And for regulators, insurance companies, and investors, that matters. Because the future of FSD will not be decided only by videos on social media. It will be decided by safety data, real-world performance, and regulatory trust. But the biggest Tesla story this week was Robotaxi. Tesla is reportedly moving toward Robotaxi permission in Nevada with a possible Las Vegas expansion of up to 5,000 vehicles. And Las Vegas is a very interesting market for Robotaxi. You have the airport, you have hotels, you have casinos, you have events, you have tourists who need short distance transportation all day and all night. So if Tesla can make Robotaxi work in Las Vegas, it could become a very powerful proof point, because Robotaxi is not just another feature. It could change Tesla's entire business model. Instead of selling a car once, Tesla could operate a network where vehicles generate revenue every day. That is the real upside case, not just more car sales, but transportation as a service. However, this is where we need to stay realistic. This week, There were also reports about robotaxi issues, such as long wait times and vehicles stopping during service. And this matters, because a robotaxi service is not successful just because the car can drive itself. The service has to feel reliable, it has to arrive quickly, it has to move smoothly, and passengers have to trust it. If people call a robotaxi and wait too long, that hurts the experience. If the vehicle stops unexpectedly, that creates anxiety. So I do not see this as a simple failure. I see it as the next stage of testing. Tesla is moving from the question, can the car drive, to the much harder question, can this become a real commercial service? That is the real challenge now. And this brings us to SpaceX. The SpaceX IPO story created a lot of excitement this week, and I understand why. SpaceX, Starlink, xAI, Tesla, Tesla Energy, Optimus, and Robotaxi could all become part of a much larger Elon Musk ecosystem. Long term, that is a very powerful story. AI, energy, robotics, transportation, and satellite communication could all connect in some way. But for Tesla stock, the short-term impact is not so simple. If SpaceX becomes public, investors will have another way to invest in the Musk ecosystem. Until now, Tesla has been the main large public company connected to Elon Musk. But if SpaceX is listed, investors may have a choice. Do they buy Tesla? Do they buy SpaceX? Or do they buy both? Capital is not unlimited. So while a SpaceX IPO could increase attention on the Musk ecosystem, it could also divide investor money in the short term. And that may be one reason Tesla stock did not explode higher this week. This is why I believe the real driver for Tesla stock is not SpaceX, it is Robotaxi. SpaceX can bring attention, SpaceX can strengthen the ecosystem story, but Robotaxi is what can directly change Tesla's valuation. If Tesla can prove that vehicles can generate recurring revenue through autonomous transportation, the market may start valuing Tesla very differently. But if Robotaxi remains limited, unreliable, or difficult to scale, then the stock may stay stuck around these key levels. So for me, Robotaxi is the center of the Tesla investment story right now. FSD approval in Europe is important. The Netherlands safety data is important. The Las Vegas Robotaxi plan is important. Semi-demand and energy growth are also important. But all of these stories come back to one thing: execution. Tesla does not need more hype. It needs visible results. It needs FSD to expand market by market. It needs Robotaxi to become a reliable service. It needs energy to keep scaling. And it needs semi to prove real commercial demand. If Tesla can do that, then the $400 level may become a foundation, not the ceiling. So my view is this: this week showed that investors still believe in Tesla below $400, but they are not ready to push the stock much higher without stronger proof. The market is telling us something very clearly. The story is exciting, but execution is now everything. Next week, I will be watching whether Tesla can hold $400, recover $410, and show more signs that Robotaxi is moving from concept to real business. What do you think? Is Robotaxi the real key for TSLA? Or do you think the SpaceX IPO story will have a bigger impact? Let me know in the comments. If this analysis was helpful, please hit the like button. I cover Tesla, AI, Robotaxi, SpaceX, and the future of technology every day here on Life in the Future. Subscribe if you want to follow the next phase of Tesla's story with me. Thanks for watching, and I'll see you in the next video. Before we wrap up, let me take a moment to introduce myself. I drive a Tesla Model Y, and at home I've installed a Tesla Powerwall, so I actually charge my car with solar energy. I truly believe Tesla is shaping the future, and that's why I share the latest news and insights here on this channel. I'm from Japan, but I want to connect with Tesla fans all around the world. That's why I also create an English version of my videos. YouTube now lets you switch the audio into your own language so you can enjoy it in whatever language you prefer. Most of all, I'd love to connect with Tesla fans everywhere so we can support Tesla together. I also share updates on X, so feel free to follow me there and let's connect. And if you haven't already, please subscribe to this channel. I'd really appreciate it. Thanks for watching, and I'll see you in the next video.